It's reminding me of the scene in Silicon Valley. I think
Yeah.
you had also.
Oh, yeah.
Well, what if you could have gone to someone and asked for less than what they offered that first round?
Like, you mean negotiating them down?
Yeah.
Can you even do that?
Is possible that a startup founder can ask for a lesser valuation?
Absolutely.
It is, but nobody
It is.
kind of like thinks about it.
No, I think that's a US problem.
So can you talk a bit about the philosophy of the investments that you have? We hear a lot about you don't look at exits. So how does that work in this ecosystem of investments?
It wasn't really a venture capital experiment, but it was more about supporting the ecosystem. How can we really create more people who are trying to help Indians save and invest better?
Are there any then success metrics? Like how would you evaluate that if you're doing fine?
I think for some of the founders that we are backing, I think the incentive is to really solve the problem that they're chasing. And for us, that is the success metric in the sense that we'd want these founders to do well, their teams to do well.
And from your end, how do you identify if this is a startup I want to invest in?
If you're solving like an important problem, and if it's within the focus areas that we're looking at today, where we're able to add value, collaborate with you, there's a large chance, a large probability that we definitely back you.
How different is the startup founder ecosystem, say in the Silicon Valley and in India?
I feel an Indian entrepreneur today is as ambitious as.
What kind of shift do you expect to see in the Indian entrepreneur space, say in the next 5 to 10 years?
We'll also see a lot more domestic capital coming into the ecosystem over a period of time. We'll also see a lot more.
Just when you thought Indian investing couldn't get more unconventional, along comes a fund that doesn't chase exits, doesn't obsess over valuations, and yet is backing some of the most mission-driven startups in fintech, climate, and health. At the center of this approach is Dinesh Pai, who heads investments at Rainmatter Capital. From a small town in coastal Karnataka to managing a portfolio of over 150 startups, his journey offers a rare lens into what patient capital actually looks like in practice and why it might be the antidote to India's funding fatigue. In this episode, we get candid with Dinesh about why patient capital isn't just a philosophy, but a working model at Zerodha, how they spot founders who really understand their problems, and what Indian founders can learn from the hard lessons of the 2021 overfunding boom. Let's dive into this sharp and sincere conversation with Dinesh Pai right here on Point Break.
Welcome to Point Break. I have with me Dinesh Pai, who heads investments at Rainmatter Capital by Zerodha. Hello, Dinesh. Thank you. Welcome to Point Break.
No, pleasure.
I know you've been very busy, but somehow, well, you made time to speak.
No,
Thank you so much.
not busy at all. I think it's just been one of those weeks where I think all of us are running around. But happy to make time for this. I think, like I was saying before, I think always nice to talk about some of the things that's very close to our hearts. I spend a lot of time on both the business side of things and Rainmatter. And like Nitin keeps saying, I think this is probably the more funner part of, I think, everything that we do. So happy to talk about it.
Great. Thank you so much, Dinesh. So let's start with, I've always been intrigued by the posts that you put on LinkedIn. And this is a common theme I've seen across Zerodha, that your aim is always to be informative, like people over here representing Zerodha and may it be in investments, everything. So why don't you just start with your journey of how did your personal journey begin with the whole investment space? What is the theory, principles, everything on that?
Right. So I was born in Udupi, which is like a very small town in coastlines of Karnataka. Obviously, I say Udupi because most people don't know some of the smaller towns in and around Udupi. But I did my schooling there. I joined RV College of Engineering in 2010. Okay. And I did my computer science engineering there. I didn't end up learning coding as much, but I met a lot of interesting people. Something that stuck to me even when I was a kid was there's a bank very close by where I stayed, and I used to hang out with some of these uncles from the banks, and was very fascinated with what they do. And I'm a Konkani, so my mother tongue is Konkani. So Konkanis are known to be bankers, I think, in Udupi, Manipal, etc. And a lot of banks that have been founded by Konkanis. And obviously, I had no history. There's nobody in my family who's been from financial services. So it kind of intrigued me from day one that why is it that it's just my family that happens to be having no footing in banking and financial services. So always the back of my mind. When I did my engineering, I ended up getting a job in DE Shaw. Very lucky, I think, very serendipitous. I didn't expect it. Obviously, a lot more talented, skilled people interviewing alongside, and I was just wondering how did it really happen. But I think luck has, its role. And when I went to DE Shaw and worked there, I really understood what markets were. At least from the Indian context, there's a lot more work happening in DE Shaw as well. That's how I really started learning more about what the markets were doing. And this was in 2014 and very early. So I was in Hyderabad. I remember some of my friends calling me and asking me, saying, "Hey, have you heard about this company called Zerodha, right?" And I knew Nitin because he had attended one event in Mangalore in 2015. So that's how I knew him. And I think the inclination to work for Zerodha, I think, obviously was there since I've seen him in 2015, because I was just working for my first job, and here is this self-made entrepreneur, right? And obviously his journey has been quite long as well. It started in 2010 with Zerodha, but his journey goes back even before 2010. So again, he's a Konkani and everybody's looking up to him, and that's how it really started. But once at DE Shaw, I stopped working at DE Shaw in 2016. Was in Bangalore for a year. Worked in UI. Didn't really like it as much. Felt I had to upskill. So I went, did my MBA in Canada. And I was there, pandemic, and I had a lot more time on my hands. Started speaking to people about what I should do next. And obviously Nitin was running this initiative called Rainmatter. And when I went to LinkedIn and I saw it's just him, there's nobody else in this company. So there's an email exchange where I just asked him if I can come help out with this stuff, and that's how it really happened. Obviously I had some experience of working with entrepreneurs, some incubators that I'd volunteered with, and I worked in Canada on a consulting role for PE deals that were happening. So there was some experience, but I did not have any first-hand experience of investing in startups. But obviously there was inclination to learn. So I was, by that time, I was trying to learn and figure and speak to more people. So all of that was there. But ideally speaking, it was probably, learning experience once I come here to see exactly what we do. But that's exactly how it started. I think, there was obviously some inclination towards financial services. And I had that hunger to learn. I still have it. And I think that's how it started. Yeah.
Got it. Perfect. So we were talking just before this interview about the misconception people have about Rainmatter Capital, Rainmatter Foundation.
Yeah.
So can you just clarify that?
So, So I think, so we have two Rainmatter teams within Zerodha.
Okay.
So one is Rainmatter Foundation, which is a non-profit. It supports mostly non-profits in the climate space. We also have the Rainmatter Investments team, which does invest in Fintech, climate and health. And Rainmatter Foundation's, probably well known because of all the phenomenal work that they've been putting in. And the capital side of things is also known, but I think most people really relate us to the Rainmatter Foundation. It doesn't really matter because ideally it's the same team, but it's Rainmatter Foundation's like a separate team that's just doing climate grants today. And again, they're doing phenomenal job in creating those partnerships, enabling more people to really think about climate as a long-term project. And on the investment side, obviously we're investing in fintech, climate and health. And storytelling. So on the climate side, we try to work closely with the foundation, try to get inputs from them, insights from them on sectors we should look at. And the founders we're meeting today, we're also consulting with them and figuring what is the market like, what are they seeing on the ground. So there's collaboration between the foundation and the capital side of things. It's ideally the same team, but these are two different entities.
Got it. So can you talk a bit about the philosophy of the investments that you have? I think we hear a lot about patient capital.
Yeah.
We hear a lot about you don't look at exits. So how does that work in this ecosystem of investments?
Correct. I think With Rainmatter, when it started in 2016, it was brainchild of obviously Nitin and Kailash. I think they were really speaking about how to really enable more and more fintech startups in India. Zerodha started in 2010, but it was only in 2013 that Kailash joined Nitin. And obviously, he brings a lot of these technical skills. By 2015, we had our in-house app. Up until then, we were running on the exchange-provided free software. So once Kailash really launched or at least built out some of these internal apps, these were modularized in the sense that there were APIs that people could use and build on top of us. Nitin kind of always likens this to like a Play Store model where people can come build on top of us. That's how some of these initial investments really happened. It wasn't really a venture capital experiment, but it was more about supporting the ecosystem. How can we really create more people who are trying to help Indians save and invest better? So Small Case, Sensible Streak, Digio, Learn App, some of these initial investments were more about enabling the ecosystem rather than investments itself. Obviously, capital played some part of it. It was more about how do we really support them. But it was just creating an ecosystem around fintech. We realized, obviously we're good at broking by that time, and but we couldn't do everything ourselves. And that's how we really thought of creating that ecosystem of people who are doing a lot more things that we are not focusing on. Today we have obviously the AMC, which is doing a lot more passive schemes. We have Ditto, which is doing health and term insurance and advisory around insurance, and they're doing a really great job. And I mentioned a bunch of these other startups who are really enabling, say, thematic investment, back testing, could be education through Learn App at that point in time. Digio was really like a fintech infra provider. So all of these guys really, enabled the ecosystem. Today, if you look at, some of the well-known fintech startups, some of these guys obviously come up in that list. And the idea was just that. So from the get-go, there was no real, vision to build it as like a venture model. And it's unfair for us to be compared to venture capital also because, like I was saying before this, I think a professional venture capital team really has to raise capital from LPs and return capital over a period of time. Because if they don't do that, then there's no model there and they can't raise subsequent rounds, etc. So we obviously are very fortunate enough to not raise any external capital. This is all in-house capital. We're very patient because we believe that we have to support these startups and these founders in their journeys, and we don't want to be exiting this anytime soon. And that in itself is a support of sorts for the founder saying, we're not going to come to you in 6 years and say we want an exit. So that apart, I think patient approach is just common sense, I feel, in venture. As much as I've read about all the OG venture capitalists in the US from 1950s all the way up to 2000s. If you look at most people, if there is all these podcasts that they do, if you ask them one regret, I think is not holding on to their investments for a little bit longer. And you're seeing that shift in the US now, right? I think you're seeing a lot more of these evergreen funds, a lot more of continuation funds, etc. We're seeing that in India also now. People applying for 10+2 rather than 7+2, etc. So I think, for 10+2 in the sense, people obviously have fund life cycles in VC. So usually it is 6 years plus 2 years of liquidation, so about 8 years. But people are doing it longer now, so it's like 10+2, almost 12 years. So I think people want to give themselves that buffer where companies really need time to scale, and that's exactly what we are trying to do as well. In the sense, try to support the company for as long as possible. But again, like I said, it's just been how we've thought about it since day one. It was never really meant to be a venture model. It was always meant to be like this.
Got it. So are there any then success metrics? Like how would you evaluate that if you're doing fine, like the companies you have invested is a good decision or not? How does that happen? I
think, like I was saying, I think exits valuation are all, in my opinion, just byproducts of a great company. If you don't build a great company and if you're raising venture capital, at some point in time, you're going to be found out, right? I think, you've seen a lot more companies raise a lot of money over a period of time. But maybe some of them are not existing today because at some point in time, somebody figured, hey, there's something wrong here. So while you can sustain for say 4 years, 5 years, at some point in time you get found out. So I think for us it's just been good founders who are building great businesses for the long term, and people who are passionate about what they're really doing. And like I was saying, I think incentives really matter. I think for some of the founders that we are backing, I think the incentive is to really solve the problem that they're chasing. And for us, that is the success metric, in the sense that we'd want these founders to do well, their teams to do well. And I'm sure, most of these guys are really helping build the community around themselves also. So we've seen that in action, a lot more of these companies. And I think that in itself is success for us. But that being said, like I was saying, I think it's tough to even in venture world to really say what is really like a success metric. But for us, it is just the ability to work with some of these smarter people. If you ask the team, what's the fun part of their day today, I think it's probably figuring out something new from some of these founders that we work with. So we have about 150 odd startups. We speak to at least 10 to 15 founders every week. And some of these catch-ups really bring a lot more insights, a lot more interesting things that they're seeing that we're probably not seeing. So I think all of those things are fun part of investing, at least as part of Rainmatter. So I'd say, those are some of the things that we'll probably consider as success. But again, it's very different to what a venture capitalist would probably think about. Yeah.
Got it. So how does one, say, apply for this? Like, how do you identify, two questions. How do you identify good founders, startup ideas? And second is, if I am a startup founder, like, how do I reach out? Like, how would I ensure that Zerodha, Rainmatter kind of invests in my company?
I think it's pretty straightforward. I think we have a website today, so people can really come to our website and really apply. And our team really goes through each application. The volume of application is so high that probably unable to get back to all of them individually, but we really mention at the end of the application that if you don't hear from us, then please excuse us. But if you're a great fit for things that we are discussing, we're watching, and we're really exploring, then we will definitely get back to you. So website is one, but I think a lot of our emails are already out there. I think we publicly kind of share a lot of our contact information so people can really reach out to us. But I think if you're really working in fintech, climate health, and storytelling, I'm sure today you would hear from your friends, your circle, your network about Rainmatter trying to support some of these sectors. And I'm sure there'll be some or the other contact for you to really reach out to us. So if you're listening, if you're a founder, and if you really want to apply, please get a warm introduction to us. But even if not, then the website application really works. We go through each of it very carefully. Yeah.
Got it. And from your end, how do you identify if this is a startup I want to invest in or not?
Yeah, so I think again,
like, are there any criteria, like any points that you look for?
I think it's very difficult to codify something like evaluating a startup. I think a lot of it is just trying to speak to the founder and understand what they're trying to do. And in most cases, I think some people, or at least some founders who come to us after years of putting in a lot of effort to figure out a particular space. So it really comes through to you in terms of how much work they put in to understand a particular, say, sector or a particular problem. And every time, a founder or a founding team really comes to you and makes you think about certain problems, I think that's a signal in itself, in the sense that if there's somebody who's sharing an insight that you did not know and is surprising and is questioning, or at least making you question a lot of things that you already knew, I think that's a great sign for us to really say, there's something here that we should pursue. But again, it's very subjective. There are obviously a lot of startups out there who are solving a lot of critical problems, and we're able to only support like a fraction of that. But if I'd say, if you're solving like an important problem, and if it's within the focus areas that we're looking at today, where we're able to add value, where we're able to, at least say, work with you, give you feedback, collaborate with you, there's a large chance, a large probability that we definitely back you. And it's just that. I think it's just the intention of working with some of these teams, because I think that's more important too for us. While investing is one, I think you're talking about investing, I think probably the most important part is what happens after the investment, because I think we take it very seriously to really support all of the startups. And that's probably even more fun part of the job, because now you're really talking about a problem that somebody else has been doing for 5 to 6 years. You have to get into it, understand it, and as investors, I think you can only learn so much by looking at a company for like a couple of days in a month. There's only so much you can know, but there's so much context that you can grasp, etc. And I think the entire team, I think today, if you ask me what I see in keeping them engaged, it's just that I think they really enjoy speaking to the founders. They really enjoy solving some of these problems for the founders. While all of us are doing this for the first time, and maybe all of us don't really have this whole founding background, except Dilip. Obviously, I think Dilip's been a founder, but the rest of us helping Nitin with something like this, I think all of us come from different backgrounds. So it's an experience for us to really help out the founder. It gives us that little bit of an excitement to really figure if there's something that we can do to help and do for these founders. But yeah, I think some of these things are really probably the metrics that if we enjoy working with the team, enjoy the problem statement, and we see that there's a lot more context and a lot more learning behind an idea, then I think we're more than happy to kind of back some of these problems.
Got it. So at the same time, I'm sure you would have also had a lot of applications where you would know that these are red flags, these are not working out. I mean, this is just to help the audience understand, like, how can they improve? Like, what is it that you would say, like, okay, this is not going to work out? Again, this is not to pinpoint, but it's again just to help them out. Like, are there any clear indicators, or is it something that you probably realize along the way? Or something?
Again, I think it's very subjective. It again, very difficult to codify. There's no template for this. But I would say, I think if you're a startup or solving a problem, there has to be enough work that has gone into really telling us why you're the right team to solve this. And while the founder is the soul of the company, I think some of the problems that if you're trying to set out to solve, which are very complex, also need help. You also need a team that is around you, that is trying to support you, give you a lot more capacity to kind of solve these problems at scale, right? So I would say, some of these things, like having the right team, probably having done the right homework around, who else, what is the ecosystem like, what is the market like. And when I'm saying the market, I'm not talking about revenues. I'm just saying, what is it that is already out there? Is there competition out there who've been trying to do something and hasn't worked? And some of those basic things I think we expect teams to really do before they come to us. Obviously, if you come to us without doing that, we obviously ask you questions, and you can definitely do it once you go back as well. So it's not that some of these things are deal breakers, but I'm saying at the get-go, are there some of the things that is good to have? So I think it's just that the deep context of the problem statement, and if you have a team that is also passionate about it. Some of these are green flags in the sense, we'd love to kind of interact with those teams, because we end up learning more. And every pitch call that we do, I see the team is smiling and coming out anytime they figure out something new, right? And I think those are the things that we're really looking for. And sometimes we've done enough study about a sector, so sometimes we've backed a few startups in a particular space and hasn't worked out well. So those things and those examples are always there. But I wouldn't say there's anything that we as a team have discussed saying there's a super red flag. Because I think every startup is a different entity altogether. Some things that worked for Zerodha might not work for, say, somebody else, some other company. I think we all have to think about it like that. So you can't really equate startups also, different people, different backgrounds, different kind of problem statement, etc. So it's very difficult to really say, oh, you know what, if you don't find this, maybe it's not going to work. But we try to probe and try to learn as much as we possibly can. At the end of the day, like I said, it's just about what problems they're trying to solve, and if we feel that they'll be the right team to kind of solve it.
Got it. Dinesh. So now just shifting gears into understanding the VC ecosystem in India. You see, okay, I will take the example of AI startups itself. Like a lot of companies are now being I mean, there's a lot of overvaluation happening, a lot of startups with the promise that this is going to generate so much revenue. But what happens in the end, it kind of fades. So how is this happening, the whole overvaluation scene? What is going wrong?
First of all, I don't think I'm qualified to talk about AI. So I think, maybe Kailash should talk about it whenever you meet him next. But in terms of valuations, I think, I'd written about this long time back. And I'd done some research about what's happened in India in some of these peak ages where, investors come in with a lot of money, right? And, one thing I've heard from people, and I've also realized from founders that I speak to, is that when there's a lot of money that's available, say 2021, when there's about $35 billion of venture capital available, 3x the annual amount for the past 5 years before 2021, where it's even lesser than 10 billion, right? And suddenly it's 30 billion. So there's a lot more excess capital available. There'll obviously be your competition raising money. Then there's an ecosystem of founders who are raising money. So it's very difficult for you to really not get distracted. But I think that learning only comes later. It's easier to say that in hindsight, probably you shouldn't have raised, etc. But it's very tough. How do you really solve for it? I think, the other byproduct of raising too much capital for any company, and especially even in our portfolio, we've heard founders say this to us, is that, anytime you have more money, I think you keep thinking, what do you do with this money, right? And you start chasing revenue line items which probably aren't sustainable just because you have money. And when then the going gets tough, you have to cut down on your spending. You obviously cull some of these revenue line items which are not core to the business, which then hurts the growth rate, which then also affects your valuation even more. So when the going gets tough, I think some of these excess money raised and excess valuation that you are aspiring for will really come back to bite you. But the second point about raising too much money at higher valuation is also the fact that you have to grow into these valuations. So suddenly trying to push yourself to do a lot more things, grow faster. And, fortunately, we've had founders in our portfolio who come to us and say, you know what, we're not able to meet some of these investor expectations in terms of valuations because we want a lesser valuation. And, obviously you wouldn't hear that in any other portfolio, but, we've had founders come to us and tell us that because they probably know that we'll be okay with that. And I think some of these things are very nuanced. But net, if you look at the learnings from 2021, 2022 to now, I would say, people, obviously the ecosystem has grown. There are a lot more startups today. It's mainstream career path for most people. So I would say, sure, if there is some positives to it, but obviously there's lots more pain probably coming because people who raised money in 2021 at a lofty valuation, I think some of them really are still having some cash. So I think, you'll really see over the next year and a half, I think, what really happens with some of these companies. But, it's tough. It's a problem in the US too. It's happening everywhere, wherever there's excess capital. But I would say as a startup, as a founder, if there's one lesson from all the founders in our portfolio, it's that, if you do one thing and do it right and do it really well and focus on that rather than looking across the lanes, because it's very tempting. You should speak to some of these founders about this also because they'd probably give you more context. But from whatever learnings we've had, it's just been that, do things which are simple and scalable and do it really well. And while you're trying to raise capital, I think it's easy to get distracted. But like I said, hindsight is great, for me to sit here and say that, but you wouldn't have known the answer for it in 2021. But yeah, I think as an ecosystem, I think we've done well. There are a lot more incubators today, a lot more fund managers today. Obviously SIDBI and the government has done a great job of seeding a lot more investors who've brought in a lot more capital to the market. So that there's a lot more risk-taking ability, but there's a long way to go for us.
Got it. I think which reminded me of the scene in Silicon Valley. I think you had also So it is possible that a startup founder can ask for a lesser valuation?
Absolutely.
It is. But nobody kind of thinks about it?
No, I think that's a US problem. I think in the US, I think it's I think it's the West or the wild, wild West. And in India, it's definitely possible. I think if, obviously as an investor, I think it's not just us, I think everybody. If you see a founder who's asking lesser, doesn't want to dilute his company too much, I think that's a great sign, right? Because he's valuing what he has. And I think, or he or she has. And I think that's important too. But it is definitely possible to ask for less money. And in most cases, you should. Because, like I said, I think too much capital. What is too much capital? That's up to the founder to decide. But if you look at what's happened in the industry over the past few years, too much capital generally leads to typically a lot more experiments that you probably don't want to sustain. So it's a tough problem to solve for. Like I said, when your competition is raising money, you really have to now decide what battles you have to fight. Are you going to stick to your core philosophies and principles, which is the right thing to do? Or are you going to also say, I'm going to hedge my bets and also raise some more capital? So it's easy for us to sit and talk about it, but obviously the founder's job is probably the toughest. I think he really has to see, or he or she has to see 5-10 years ahead. And I think when they're trying to do this, I think it's a tricky spot to be in. So hopefully we'll have some learnings. I think still again in that phase, and I think over the next couple of years we'll have more and more of these examples of what not to do. And I think that's when we really kind of can come out with more examples of why certain things shouldn't have been done. Yeah.
Got it. Since we're discussing about Silicon Valley as well, so I mean, you touched upon the VC ecosystem.
Yeah.
How different is the startup founder ecosystem, say in the Silicon Valley and in India? Are there major differences?
So I was speaking to my colleague just like in the morning about this, and my answer is because I haven't interacted with anybody from Silicon Valley, and we don't know any founders there. At least none of our portfolio companies are set up there as well. But I would say the founder mentality isn't really that different. I feel an Indian entrepreneur today is as ambitious as anybody else out there. Obviously, the ecosystem is different. I think there's lots more risk-taking ability in the US, lots more capital. It's at a different scale. But in India also, I think today, if you look at some of the founders doing some great stuff, I think the founder ecosystem is developing. We're a young venture ecosystem. Venture started in the US in 1950s. If you look at India, it only started in 1988s, 1990s almost, and maybe even early 2000s. So we're just 20 years, 25, 26 odd years into this whole ecosystem. So it's tough for us to really compare to the US. But I'd say we are growing. And I was just thinking about what can keep us growing is our talent, right? I think we just have to make sure that all of these smart people are staying back in India, building for India. And that'll only happen if we do a lot more of risk taking. There's a lot more domestic capital available, which is backing some of these people. And beyond that also, I think everywhere around us, I think, there's a lot of climate problems today. Obviously health-wise, obviously all of us are trying to be healthy now because of awareness. And I think, there's lots more to do for us as a country on the infra side, so that a lot more of these smarter people really stay here, build companies here, create employment here, create value here. That'll only help and generate that ecosystem. Like what US did really good was they created this ecosystem, that infra, so that people would want to stay back and really build there. And I think, we're getting there. Like I said, I think, the government's done a great job of pushing a lot of the startups, right? And I think we just have to keep at it. And, I think maybe in 10, 15, 20 years time, maybe we can compare. But I think it's too early for us to really compare.
Got it. Yeah. And talking about, I mean, not in comparison with the Silicon Valley, but say Indian startup ecosystem itself, what are the operational challenges or cultural challenges that most commonly faced by startup founders here?
So again, it depends on where you're building and at what stage you're really trying to say go to the investors. Because obviously bootstrapping is an example where or at least in a bootstrapping model, you don't have to really go to the investors. You can really sustain the business by yourself. So in those cases, I think really have to look at the market and say, what is the regulatory markets like, or at least what is the regulatory landscape like? What is like the talent pool like? Like I was saying, I think probably the largest problem that I see, or at least I would have had conversations with our founders about, is just the ability to hire the right people with the right skill set. And I feel the talent in itself is a problem, in the sense that I think we need more of our good people to stay back. I think a lot more people going to the US and abroad to study and end up staying there. And how do we really kind of get more of some of this group to kind of also stay back and work here? But beyond that, I think, obviously a lot of uncertainty in, say certain industries, right? I think, that is also probably a little bit of a challenge. Obviously, I think, it's in every country, but I think we've been speaking about it for quite some time now. So I think those challenges, plus we still do not have a lot of domestic capital for venture in India. I think even today, even having spoken about this problem for about the past 5 years, through various forums, right? And we still have 85% of the capital coming in from abroad. And I think the problem with this is exactly what happens when you see like a shock of 2022, right? While everything was fine probably here because of a macro factor that didn't even concern us, suddenly there was no venture capital from about $25 billion in 2022 to about 10 billion now, which is a normal, but I'm saying if we had more domestic capital, probably we would have had a lot more capital to deploy. Again, all of these are hypotheticals, but I'm saying probably it would have been better. So some of those challenges, but I would say talent is probably one of the biggest. And I think the other aspect, which is beyond technical, beyond structural, is just the say our societal view of failures. I think whenever I meet my friends, I think the one thing that we talk about is we're all very fortunate to be where we are. It could have been easily, we would not have had great opportunities, or could not have met the right people, would not have gotten lucky. And there are so many examples in our friends group who probably are way smarter for what they're doing today. And some of those things I think is also relevant for the founder group, right? Because there are a lot more founders out there who probably failed in the first couple of ventures and faced a tough time really coming out of it. So I think the US is at least what people tell me is that in the US, failure is not considered as the end of your career. That's where people really start out, right? I mean, if you failed, I think you go talk to people, you're proud of it. And I think in India, I think it's starting now.
Yeah.
But it
like
hasn't
stigma,
happened.
so-
There's still that stigma around it. And I think some of those structural issues will always, I think, has been around. And hopefully over the next few years, we'll be able to, overcome it. But yeah, those are some of the things that I can list from the top of my mind here.
Got it. Just a bit on the talent part. So
Yeah.
is it because like you have a lot of migration of talent from India to abroad? Like say you want to go for your higher studies, you go there, then the whole aspirational bit of starting a startup
Yeah.
would come from there. I mean, is that one reason?
It could be a variety of things. I think, in fact, I think we would have a lot more smarter people working in roles in various companies in India today, which probably is not really a great fit for them. Maybe they could have done a lot more different things, but they're comfortable, and it could be that as well. So it's not just migration. That's just one factor. But I think we need more people to really push themselves, hopefully. And again, I think it's maybe something that I'm saying without too much data.
Okay, sure.
But I would say even in my friends group, there have been multiple instances within the 10, 15 people or friends that I meet. We've all had to push each other to really do things. I think, because at some point in time, you keep thinking, should I really kind of also do more? Because, this is great, whatever. But I think those things have to happen in India in the sense, if you look at people in the US, I don't think US is a benchmark anyway. I keep giving these examples because I think there are a lot more examples that are floating around. But I think a lot more people push themselves to do or experiment, and I think that has to happen. But it's also how we really say study through college, right? My own example. I think I did engineering. Didn't do a great job at it, but I still got the degree, and I'm sitting here. But I would say could have done it a lot more better if there was a lot more guidance. Somebody would have come to me and said, why don't you do it this way? Maybe it's fun this way. So that hasn't happened. So maybe we can do a little better with our education systems, do better with guidance for people who are really going through college, etc. And all of that will really help down the line. But I think talent in itself, I think we have smart people. It's just that, how do we now really get these smart people to do all the right things, to be at the right place at the right time for some of these opportunities? It's a tough problem to solve. I don't have the answer, but maybe somebody can solve for it. Yeah.
Right. And any tough feedback that you're given to founders that you can recall?
No, nothing. In fact, I think we're very, very hands-off as investors. I think, like I was saying, I think it's a tough job. It's easy to be an investor and say, pick out mistakes. But like I was saying, I think it's very difficult as investors to look at a company, look at the financials of the company, look at operations of the company, maybe 2 hours in a month, and say, hey, why didn't this go right? Why didn't this go, or why did this go wrong? I don't think we'll ever do that because the founder has a lot more context, is spending a lot more time. So there's never been any kind of feedback that we've given to founders which is about this, about mistakes, etc. But we've obviously given feedback in terms of the market, in terms of what we are seeing. If there's a product out there which is kind of similar space, some experiments out there which seems like it's something that the founder should know. We've kind of shared those, but nothing about the company in itself. Like I was saying, I think for us, we know that it's a tough job and it's a learning experience. So it's very difficult for us to go back and say or at least pinpoint and say why didn't this go right? Because it's easy to do that in hindsight, but it's a tough job. Yeah.
Got it, Dinesh.
Yeah.
Just coming to the end of this, if you're looking into the future, what kind of shift do you expect to see in the Indian entrepreneur space, say in the next 5 to 10 years?
I would say just one is obviously having a lot more people accepting what risk taking is. I think that'll happen more and more, thanks to say things like Shark Tank, thanks to angel investors in India, thanks to all the people who are enabling and building incubators. I think more people know what startups are and why it's risky. And I think we'll see a lot more people solving for a lot more problems. That is one. I would also say we'll also see a lot more domestic capital coming into the ecosystem over a period of time. We'll also see a lot more people staying back and building in India. Like I was saying, I think we have a country full of challenges. I think when we started Rainmatter in 2016, it was all about enabling more people to really save and invest better. From about 3 crore Demat accounts in 2019, 2020, we're at about 20 crore total, but about 11 to 12 crore unique Demat accounts today. That is still a small portion of 60 crore odd PANs linked to Aadhaar. So there's a long way to go there. We are a country where there are a lot of climate problems around us. I think we travel and we see a lot of waste around us, and we've got to solve for waste management. Water is a problem, I think, in Bangalore also. I think we have to solve for that. And in health, obviously, I think it's very evident. Like a lot more people don't have insurance today. About 21 crore people or Indians are almost diabetic. About 40 to 44 crore people almost obese. A lot more children, women, anemic. So I think some of these problems need people to solve for, and we'll see a lot more Indians take notice of some of these things and really solve some of these fundamental problems also. So I see that happening. But I also see the government pushing more and more entrepreneurs, because it is also startups who are actually creating positive impact all around us.
Yeah.
Startup is no longer IT services and software anymore. I think we have so many deep tech startups, especially in our portfolio as well. I think we have a lot more startups who are doing some cool innovation. I would say even if they fail, at least there is a bedrock of information that the next startup can really use. And I think we as an ecosystem will start thinking like that. So, that's when we'll really start supporting more and more of these startups, because it's not just about that one particular company, but it's also about the long-term, say, ecosystem sector, and how we really see India growing over the next few years. So yeah, I think, we're doing well as a country, in the sense we're a growing country. Even if we don't do anything spectacular in the next 10, 12 years, we're going to, at least we're projected to double our GDP. That'll only help our per capita GDP as well. So there's lots more happening. But I think it'll also bring, all of this happening, it won't matter if we don't solve for, say, our living conditions. And, that's why, climate is also such an important problem for us. So we're trying to support more founders there. And health also, I think, like Nitin says, if you can make all the money in the world, but it's of no use unless you have a good health to really enjoy it. So I would say to everybody, I think some of these shifts where people solving for problems and there'll be more domestic support, I see that happening.
All right, great.
Yeah.
Thank you so much, Dinesh, for your time. This has truly been insightful.
No, thank you. Cheers.
What stood out in that conversation is how different investing can look when you're not chasing quick wins. Dinesh Pai offers a rare behind-the-scenes look into a model that values context over hype and relationships over returns. As India's startup ecosystem matures, so will the questions we ask about capital. Who gives it? What strings are attached? And what really counts as success? That's all we have for this episode of Point Break. I'll be back with more such interviews shaping the startup and VC ecosystem in India. Until then, stay sharp, stay curious, and think AI, think AIM.